All right, so we are continuing on with May 10th paid ABC supply in full less discount. So we need to determine the balance that is owed to ABC supply. So you draw a line and you will see that the balance is $3,900 on May 5th. All right, so we're going to figure out the amount of cash. So cash is going to be reduced. So we're going to credit cash because it is within the discount period. The amount owed is $3,900 minus the, if you scroll up here, the 2% discount because it's within 10 days. A 2% discount of $3,900 is $78. So the amount of cash will be $3,900 minus $78, which is $3,822. So that is going to reduce or credit the cash. And the amount owed is $3,900, so we want to reduce, there's no longer liability, so we're going to reduce or debit accounts payable for the full $3,900. And the difference there is the discount. Now, this discount was on a purchase. So the purchase of, when a company has a discount on a purchase, the discount amount is going to be applied to the inventory. So we are going to credit merchandise inventory for the 78 to reflect that, oh, the inventory was not paid full price, so we want to reduce the inventory or credit it for the amount of the discount. All right, now let's go ahead and post this debit accounts payable on May 5th for $3,900, and now you will see, oops, May 5th here, let me fix this. And now you will see that there is a zero balance in the accounts payable to ABC. All right, let's move on to May 11th. May 11th, purchase supplies for cash. All right, so Artie is buying some supplies. Now, supplies is different than inventory. Supplies are used within the company. So, for example, office supplies versus inventory is sold to customers. So we are going to debit the supplies. We're going to increase the asset supplies for the amount of the purchase, which is $400. And it said up above that this was made for cash, so we are going to reduce or credit our cash for the $400. All right, let's move on to May 12th. May 12th, purchase merchandise for cash, $1,400. So they're buying, their buyer, Artie's the buyer, they're going to buy some more inventory. So we are going to debit, increase the merchandise inventory. Let me spell this correctly. And the amount of the purchase is for $1,400. And here the purchase was made for cash. So we're going to credit, reduce the cash for $1,400. All right, now let's look at May 15th. Received refund for poor quality merchandise from supplier on cash purchase. So back up here, they just bought this inventory for $1,400 and they bought it for cash, and now they are returning some of that inventory that they bought because it's poor quality. So think about it, if you buy cash, you buy let's say food or other items for cash, and if you bring it back, usually you will get cash back. If you buy something with your Visa, with your credit card, and you return it, usually you're going to get a credit on your Visa. So here we've got this purchase up above, too far, was made for cash, and now they're returning some of it because it's poor quality, and so they're going to get cash back. They're going to get a refund. They're going to get cash back, and for $150. So let's go ahead and record that. So they're going to get their cash back from the supplier. So we're going to increase or debit cash for the amount of the return, which is 150. So this is a purchase return. And the reason they got that 150 is they returned inventory. So we are going to reduce or credit the asset merchandise inventory for 150. All right, that's the 15th. We've got two more. Let's look on the 17th. Purchase merchandise from XYZ distributors, 1,300. FOB shipping point, which means that if it's FOB shipping point, that means the buyer will be paying the shipping or the freight. And in this case, Artie is the buyer, and there are some discount terms available. All right, so we want to record the purchase. So we are going to debit the inventory, the asset, the current asset, because when you buy something, you have more of it. Debit merchandise inventory for the amount of the purchase, which is 1,300. And credit, increase the liability, accounts payable. And that is to XYZ company, and that's 1,300. And let's go ahead and post the 1,300 to the T account for accounts payable XYZ. All right. Then the last transaction we're going to record is on the 19th, paid freight on the May 17th purchase. So just that purchase up above from XYZ. We are now going to show how Artie is going to record paying for the freight on that. So in this case, the arrangement was that the buyer, Artie, would pay for the shipping to have that inventory shipped to their location. All right, so on May 19th, we are going to, paid means cash, so we want to reduce or credit the cash for the amount of the shipping or freight, which is 130. And the account that is going to be debited when the company is paying for, they are the buyer and they're paying for the inventory to be shipped to their location, they are going to record that to the merchandise inventory so that the merchandise inventory not only reflects the cost of the inventory purchase, but also any related shipping. So we are going to debit merchandise inventory for the amount of the shipping related to that purchase, and that is $130. So if the buyer pays for the shipping, it's a debit to merchandise inventory. However, if the seller pays for the shipping instead of a debit to the merchandise inventory, it would be to the account freight out, which is an expense account. All right, so we have gone over the transactions for May 1st through the 19th. What I want for you to do is to complete the transactions for May 25th through the 31st. So you're going to have 4 dates there. You can do that on the second page. You're going to be completing, and I recommend that you utilize the T accounts. You're going to be doing that. And then when you have completed that, you are going to upload your completed document in Canvas for your class participation points. All right, thank you very much.